Hello, welcome back to White Swan Finance. Today we're going to look at support and resistance as I think it's an area that really trips up newer traders. We can all open a chart and draw where we think support and resistance might be, then make up our own narrative as to why we are confident in that area. But if it were that simple, we wouldn't need to do anything further. We could just set limit orders and wait for the profits to roll in. But sadly, the market doesn't function quite like that. You may disagree, but I think the concept of support and resistance is one of the biggest areas that holds traders back. Now, hear me out. I'm sure there are many out there who believe if they just found better levels, then their trading would finally be profitable and they would be sailing in a yacht around the Maldives next month. But I don't think that is likely to happen. Let's begin with the idea of support and resistance. Let's say we have this area of resistance. If price comes back to it, we want to see it sell off again. And if price breaks through, we want to buy, as it must now be an area of support. Everyone knows that explanation, right? Well, it isn't incorrect, but the reason so many traders fail is because that's as deep as their understanding goes. Furthermore, if price doesn't get back to this level, you say, oh, it's manipulation, and that's why it didn't reach my zone. And if price breaks your zone, triggers you into a long, and then reverses and stops you out, you say, oh, price is manipulated and the market makers made me lose. So what's the solution? Well, I would say there are two things. One is patience, and two is order flow used correctly. If you have found an area that you think is resistance, it doesn't mean that that is the exact zone that price will reverse or react. Treat it more as an area of interest. As price is approaching that area, watch the order flow. Are you seeing aggressive buying? Are you seeing sellers starting to come in and absorb the buying? Watch the data that you have at your disposal. On the depth of market, are orders being added to the book or removed? On the footprint, is the delta strong, weakening, or not really changing yet? Looking at a real example, we have already been selling off today, and we are thinking of looking around this level to take a short continuation trade. If we were trading this like a lot of retail, we may have placed a limit here and then been stopped out, because where else would you have put your stop order? So instead of something like that, let's look at the order flow. First of all, remember, we are using this as a zone to pay attention to the order flow. We think price might reverse and continue down, but we aren't going to do anything until we see the order flow confirming that. So keeping it basic, look here, an unfinished auction. So we are already expecting this to break. That's why we wouldn't have been interested in taking an entry here. Although, if you had, it perhaps looked like this. So we then break above and create a strong high, which I won't explain further in this video, I've already covered this. But my point being, the order flow would have helped us get into a trade with much more confidence plus a far better entry point. Let's look at another example. Lots of retail will look at this and say something like, oh, we've swept the low of day and now this is our support zone. Well, that idea didn't work for you. So then maybe you'll FOMO into a short back around here, and that also doesn't work for you. I know in hindsight, everything is easy, but actually in real time, we could have predicted this breakout to fail. So let's look at the order flow. This is the overall, but we will look at this step by step. First, upon the break of the low of day, we have a strong negative delta, good volume, and we aren't seeing any strong absorption from buyers. Now, notice something down here. The volume is no longer as high as it was. That's okay, but it's something that we should be taking note of. If price comes back up, we really want to see sellers stepping in around this volume cluster to confirm this breakout. Even less volume traded now. So let's look for sellers to step back in and then we can join them short. We don't see any attempt to defend that volume cluster. We do have a strong delta now, but check the volume. It still isn't particularly high, so we aren't going to just buy this. Then we see some volume coming back, but we are now above those high volume nodes, so be careful with a short trade. The next candle, we build up some small volume nodes in that zone, but not enough to make us take a long. Furthermore, a small detail here is this double zero at the bottom of this candle. This is not a imbalance reversal. Commonly, the market will trade back to these levels with the double zero. We continue on, and now there are two trades that have appeared. If you are fast and confident in scalping, then you could have taken a scalp back down, maybe something like this. But there is also now a buy that has presented itself. I won't keep on in this format for now, as I know it's a little tedious. But again, my point is not to use support and resistance as binary zones to just buy or sell. You need to be watching the order flow. So what are the best ways to find key levels? Personally, I think the most effective methods are to use a TPO chart and a volume profile. If a TPO chart isn't available to you, the volume profile alone will still suffice. For example, study the previous day's volume profile. Mark the point of control, the value area high, and the value area low. Observe the volume distribution throughout that day and highlight any untested volume clusters. Unlike what retail traders do with top-down analysis, working from a daily chart down to a lower time frame, you don't need to do that. I can tell you, nobody in a bank is taught that style of analysis. In my view, it is a total waste of your time. Instead, you should be focusing on analysis that provides real insights, not doing what every other retail trader is doing. As for the TPO, I will do a standalone video on this in the future, as I don't want to rush it into the end of this video, nor make this video too long. So stop loading up a chart and doing anything that resembles this. Anything that is prediction or assumption based, just throw it out. Treat support and resistance zones as zones of interest where you want to watch the market closely. Approach each area with patience and a focus on the order flow. Study the footprint, observe the depth of market, and see where the real market activity lies. As you practice, you'll find that this approach helps you react to what's actually happening rather than what you hope will happen. If you enjoyed this video or want any further explanations, let me know in the comments below. If not, I'll see you next time. Bye for now.